Welcome back to Real Estate Simplified. Cherry, let's talk about some renovations. What should people be keeping in mind from a tax perspective when thinking about renovating their property?
So remember earlier we talked about current expense versus capital expenditure, right? So it turns out that if you were to purchase a resale home and you go in, you have Brady out there doing your home inspection, and you recognize that there's a bunch of improvement that you have to make to get the house ready for rent. And as it turns out, when you buy a resale home, if you do a bunch of repairs, even though normally it would be considered as current expense, if you do it immediately after closing, they are considered capitalized expense. So you won't be able to deduct it as a write-off as current expense. You have to add it to the building years down the road when you sell the property to get the benefit of the deduction.
Gotcha, and that's definitely something you need to know before you start embarking on those projects. So when does renovating become building? Because the HST implications can change if you're doing a huge, almost rebuilding the property. Can you walk us through that?
Okay, so if you buy a home and then you decided to obviously tear it down, then that situation is very obvious. You are now considered a builder in the eyes of HST, Excise Tax Act. So you would have to charge HST, or there is an HST implication when the property is ready for occupancy. Whether in the case it is you're building it for rental purpose or you're building it to resell, there is a tax implication. Now, if you just buy a home and you're planning to renovate from top to bottom, substantial renovation, CRA look at substantial renovation, and the consideration of substantial renovation is based on how much you renovate. And 90% of the floor space or 90% of the floor and wall space are considered over that threshold would be considered substantial renovation. When you consider substantially renovated your property, then you're considered a builder, and that means you have to charge HST, and that could be a huge hit to the bottom line.
Yeah, which is why we're covering this right now.
Yep.
Now, let's talk about refinancing. So let's say you've acquired a property, you've improved the property through renovation, and now you've increased the value and you want to refinance and pull some money out. What are the possible tax implications? Is that tax-free money, or how does that work?
So two things. First thing is that if you were to own this property, rental property in your personal name, when you refinance, the money goes into your bank account. There's no tax implication. Essentially, you're just cashing out early. So you're taking a portion of the money that you would otherwise get from the sale of the property early. Now, the only tax implication would be that, using an example, you buy a house for $500,000, you have an initial mortgage of $400,000, and later on you get it refinanced and you have a mortgage of $480,000. That additional $80,000 that you pull out from the home equity, from the appreciation, that $80,000, the interest related to the $80,000 may or may not be deduction, because CRA, for interest deduction, CRA look at how you use the $80,000. If you use the $80,000 for an investment purpose, for earning more interest, then you would be able to deduct the interest expense on that $80,000. If you take the $80,000 and pay off your own primary residence home, which is not for investment purpose, then you would not be eligible to deduct it.
Well, CRA wants us to expand our portfolio,
Yep.
so we should be using that equity to buy another property.
Yeah.
That's great. So Brady, speaking about renovations, it's very common now and very popular to add accessory apartments in a bungalow, in a detached home to help with cash flow. What sort of tangles do people get into when they're going through that accessory apartment process?
First off, understand how much it's going to cost, understand how long it's going to take, and just make sure you've got the budget and the time to do all the work. Third, I would say make sure the people doing the work know what they're doing. There are permits. If you're doing a legal basement apartment, you have to go to the city with your plan, submit it. They'll get back to you and tell you whether or not the plan works. They'll say you would need to add more windows in the basement or make the existing windows bigger. Can you do 2 bedrooms? Can you only do 1? A lot comes down to what the city is going to tell you can do. Some people will do them as a non-registered basement apartment, in which case you're kind of running a thin line on whether or not it's your family that's staying with you or are you actually renting it out. I think personally, if you're going to put an accessory apartment in the basement, it should be registered with the city. I actually find that the city gives a second set of eyes that just looks at things a little bit differently than what you want, and they'll say, don't forget you have to do the following things. And I've always kind of found that when they do that, the outcome is actually better. There's been times I've gone, they're going to make me do that. But then when you get it all done and you look at it, you say, I'm actually kind of glad they did make me do that.
Yeah.
So, and then everything's above board. The city knows they're there. Nobody's going to call the city on you and say, hey, my neighbor's renting out the basement. Is it a legal basement apartment? Me personally, I think it's always good to have it above board.
Well, even from a liability standpoint with insurance, we've talked about that on other episodes. It's a big deal, and there's some things that you wouldn't even think of, such as you need a certain amount of sunlight coming in per room, and so that's why it's important to have somebody drafting the drawings that knows what they're doing and has that experience. So then, how can people manage their renovations more effectively? You're a very experienced guy. What sort of tips can you give people throughout that renovation process?
Depends on the extent of the renovation. Word of mouth, I think that is the best way to choose who's going to do the work for you. Anybody that is good at what they do, they're booked. They're not out advertising. They're not looking for business, because just the word of mouth, they've got a lineup of people that are waiting for them to come in and help them out. So in terms of looking for who's going to do it, go by word of mouth. In terms of managing it once they're in there, it depends on the extent of the renovation. Is it big enough that you need plumbers? You'll always need electricians, but can a handyman typically handle the scope of work, or is it a big enough scope of work that you need multiple trades to be in there to do it all? Because there are handymen that are really good, but if it gets past that scope of work, where if you're into a very extensive renovation, you're going to blow your timeline. Guaranteed if you go with a handyman, whereas having framers come in, drywallers come in, plumbers, electricians, flooring guys, it just cuts down the amount of time that you're going to have the exposure to the renovation, because renovations are tricky, and I can tell you my wife does not like living in a renovation.
No, well, we'll keep on her good side. Yeah. Well, Brady, that's good stuff. Cherry, thanks so much for joining us, and thank you for joining us today on Real Estate Simplified. I'm Seth Ferguson. See you next time.